with volatility this high and being option traders, we know really that the best thing to do is really be net sellers of options. Right now is when we want to be kind of deferring to iron condors, butterflies, things like that uh, in terms of our trades. Unfortunately, we do have a Boeing trade on still. I have a big position in Boeing. I haven't touched it. This is just, again, one of those things, I'm expecting the market to kind of level out. There's just going to be a lot of fear and a lot of talk about, government shutdowns, travel bans, things like that that are going to really affect any kind of travel related stocks. So we might be able to take a look at like the Jets ETF or maybe some of the cruise lines, things like that. We did have FOMC minutes come out last week also, and there were some, expected talk about inflation concerns and potentially speeding up some of the bond purchases. And again, looking at potential next year rate hikes. But again, most of that was really, really expected, so it really didn't move the market. Last week, we have a very low volume, and so we'll say low volume, but there's not a lot of buyers and there's not a lot of sellers. So when we have news like this Omicron African variant coming out and people are able to open up their brokerage accounts and sell, well, there's not really a whole lot of buyers to pick up the slack. So we'll see some big moves. And I'd expect probably some of the same. And really from now until Christmas, we should have some fairly low volume compared to normal. We did have, I don't have anything written here. Oh, White House rule, not back to, uptrend, but at least back to just below 80, something like that. So maybe think energy, OAH, those type of trades. To put this in context, 50 million barrels. The U.S. uses like 19 million barrels a day, so it's really not a huge thing. And again, it's just more that holiday overshoot, right? Is what I'm calling this. So, but this is really the highlights of last week and what really came out of it. We have some earnings trades this week. This is really going to be our last week of earnings season. Earnings season's technically over, but we won't really have any more IVES trade after, I think, one more this week, and then they'll really just kind of be ad hoc. We do have CRM reporting this week. Pretty much everybody's hitting, with the exception of Disney and Boeing, unfortunately. Overall, still looking strong. Today, we do have a speech from Powell, and I did this in a little bit different format, so hopefully we can get into the charts a little quicker. Again, so we did get housing price index. This stuff really doesn't move markets a whole lot. Chicago, this is really the thing. So about, this might have already gone through. Yeah, 7 a.m. I don't think I caught it. So he had a speech, was supposed to have a speech. We have a couple Powell speeches this week. So big speech week. So we have another Powell testimony at 10 tomorrow and a Yellen speech right at the same time. I know it's weird that it says the same time, but that's what the calendar said. Chicago PMI purchasing manufacturing index has been doing good. I'm not going to go back and find out what was Monday. Wednesday, we get ADP, which is the private sector job claims. And again, this week we're going to have the first week of December. So we do have non-farm payrolls coming on Friday, which is going to be the biggest number of the month and the week, as always. So between now, really this week, I just really don't see a huge trending trade that is going to be super lucrative, unless we're going to be doing some iron condors, things like that. So that's really where you should be looking at. Manufacturing index, this has been good. This is probably the biggest sector that beaten down during COVID and starting to see some of that rebound. Beige book, so we have the FOMC coming back up in the near future. And so we have the beige book this Wednesday, which is really when all the Fed presidents get together and write about what's going on in their local sectors. And they use that, collaboration, or that collection of write-ups by each Fed president to create the FOMC meeting. We'll get some of this, so we'll have an idea of what's to come. Thursday, super low day. If we're going to have a green day, this is probably going to be it, because there's just nothing going on Thursday. And then Friday, we do have non-farm payrolls, which is, again, the biggest number of the month, biggest number of the week whenever we get it. This is all about unemployment. So these numbers in parentheses, by the way, this is what's expected. So this will be recorded. You guys can see this and review it. But the market is expecting a number, and it comes in good like this, which is above the prior. This is not going to move a market. The only thing that's going to move a market is what's not expected. And again, this is so unemployment rate, petition rate, participation rate. These are all things that are really going to be dictating where we go in the market for the following month. And so with that, every week we start out with the basic layout, right? So this, if you're not familiar with charting, again, if you're trading, you should have this type of layout where you're checking major charts. So this is S&P 500, NASDAQ, Dow Industrials, mid caps, IWM, Russells. Volatility index is here. Right now I have gold today, interest rates, the TLT, which is the 20-year bond, and I've been using Bitcoin. Sometimes I'll switch gold out for like the dollar index, DXY, things like that, maybe crude oil, depending on what's going on in the market. But you want to have a basic gauge across the board for the 4 major indexes here, and then a couple other indexes that will give you a gauge on what the upcoming direction should be. I'm just going to take a quick look. Have you looked at this at all, Steven? I know you trade these 0 days. At the SPY chart?
Yeah, volume's kind of flat, and it's not,
Yeah, so super flat volume, which is expected. We have this big giant gap right here, and I think this is Friday. I mean, this is the day of finding. This is the variant, right? What happens? Oh, headline, new African variant. Don't know what to do. Not a lot of buyers to pick up the slack here, and we get this type of like major gaps. I mean, there is a gap. Let's call it gap at what is that? 469. Eventually, that gets filled, most likely a big gap like this on a major index, I would assume. And so this box right here I have is an average week's move, which happens to sit right right about the spread of what we got from Friday's sell-off where we were. So again, this is just Friday. So Friday, the entire S&P 500 moved the length of an average week. This is not normal. So for the next week, I really just expect us to stay in this kind of trendless range while the market really just digests what's going on. So this is the type of thing I would expect to see until we can kind of gain our footing. We get a little bit more information on how we're going to deal with that and really how bad this variant is. So I wouldn't panic sell anything. If anything, especially with the Fed, so many Fed meetings coming up, there might be some dip buying opportunities down here in this kind of range for a longer term positions, somewhere between 460 and 455. Yeah, I'd say that's a good value area for sure if you can get down there. So I'm just going to throw a little alert. We had this dynamic support, which is gone. And this green dotted line was the prior all-time high. So this is going to be definitely a level to note. And if we do get there, we should bounce. But right here, free market is where I've already kind of showed up to work today and was like, wait a second, that's way too far. That's a whole week's range in 24 hours. Let's go ahead and buy that dip. And they did. So this is going to be a pretty critical level to pay attention to this week, about 457. So that should act as our weekly support. So anything around in between 460, 457 would be a buying kind of area. Up here, I'd be more selling calls and collecting theta on whatever position I'm looking at here. So high end of the range for the week. Again, just fill the gap, 469, call it 470, which would put us close to all-time highs, but we're really not far off. Qs, want to take a look. So again, same kind of thing. Not a full week's range, but this is more than a couple days range, and we're already filling. Where did buyers step in? We do have a gap on the downside here, 390, and this is going to be more inflation sensitive. 491-ish on the downside. And again, I'm taking this level into account. Where did buyers step in? Right away this morning, a ton of buyers. So we may get this tested. We got a couple little wicks here that look interesting. 392.80. If anything, this week I would say I'd be more interested in playing some of these index 0 days than making any major trades maybe today. So I'd be more seller of calls. Monday morning IV pretty high. If you guys we don't trade a whole lot of stuff in the industrials typically. This is a very weird green line, prior highs, but a big gap. Look at this gap. We know that because we trade Boeing. But sometimes it does, and it's just something easy to have as a target. We had a gap here that just got filled. Cool. I do see this 345-ish level on the Dow as probably weekly support, most likely right around the 200-day. Puts the weekly range somewhere close to the prior high. This green hash line again, that was the prior all-time high, so that expect that to act as resistance. Be more of a net seller if we get up there, and expect a little pullback. Nice, Jeff. I appreciate that. I don't know. It's mostly it's Omicron is what the problem is right now. So this is the VIX. So I do want to point something out. So VIX is the volatility index of the S&P 500 specifically. This is tradable if you're trading something like Thinkorswim or TD Ameritrade, Schwab, any established brokerage. You can trade the VIX itself, ticker VIX. If you're in like a Robinhood, Webull, another app focused platform, you may not have this. You may have to use something like VXX, which is a little bit different, or like VXX is the closest thing. UVXY is not the same thing. VXX is short-term VIX futures. So it's just the next week, the next expiration of the VIX futures contract. This is the actual VIX futures contract, but trades like a regular. So what I wanted to point out was we had this huge jump after that big move, and so we can kind of go back in time, and I have some 18 puts here, which probably aren't going to pay out that great, but what we can do is actually do some credit spreads, call credit spreads, and likely flip that put 18 put into a put credit spread as well, and flip this whole thing into an iron condor. So last time and most times when we have this big pop up in the VIX, what I wanted to point out here was that you get this little consolidation area just like this. You have a big pop up to the 25, 30 level. You get a big whoosh down. This will be, we want to kind of close our puts here or put that put spread on. We should expect a consolidation period just like this. And how long is this? So I'll do this. This is 2 weeks, give or take, a week. So maybe not this week, maybe next week. This makes sense with the low volume that we should expect. So almost every time we have this big jump up, we get this kind of consolidation phase on the VIX itself. So this kind of provides another little opportunity for us too. So even here, jump to 25, you'll get a little choppy trend zone or trendless zone right here. You guys see this? So this is what I'm going to expect this week. Maybe not, I don't expect it to get above 30 for sure. What I would say is right here, we're about 25. I'd say 25, 30, credit spreads, call credit spreads, and probably we can use this 18 put as the base. When it comes down, maybe sell a $20 put. I'll walk through that with you guys if I end up. But for right now, for sure, I'd be interested in a call credit spread on the VIX itself, and that would be a typical pretty gimme trade in my opinion. I do want to go through a couple things on crypto space. As always, since we have so many crypto folks in the cryptoverse, I'm not a bull. I'm a bull long term. Short term, I don't see this going higher just yet. So here's what we have to do. We have this kind of dynamic downtrend happening. We first broke out here, and we see this so often in all of the rest of the charts, so you guys should be very familiar with this type of pattern right now. We have this big consolidation phase. This is 20% consolidation, really minimal, quite frankly, for Bitcoin. To put it in perspective, we did just move in a very fashion, 65% in a month. So to see a 20% drawdown, super healthy and very normal. I'm taking this prior high kind of consolidation zone, and this whole zone we have to clear before we can say we're going higher. And right now we're right smack dab in the middle of it. We should very easily, it would be very reasonable to expect some consolidation, and you should not expect any kind of crazy, especially with what, in the interim, we have this downtrend, right? Again, you guys know how to use this. We have to break out before we can go higher. We're below kind of like 58 as a key resistance level, so this is support and resistance act like magnets, right? So chopping around here, bounced off here. So this was support, this was resistance, became support, became resistance once again, resistance, support, chopping. I expect a leg lower, and once you guys take a look at this chart and really start to look at it, you should too. Long term, this is very good. The other one, Ethereum to Bitcoin. So this is the relationship between Bitcoin and Ethereum. What that chart is really good for, super bullish on, is what we've been talking about forever, and that's alt season. and that is the relationship between all the other tokens in the cryptoverse versus Bitcoin, the big behemoth. And this is the one chart, Ethereum to Bitcoin, that was going to tell us when we're getting there. And we've been saying we're just now starting, and look at this. We are just about to break out. So while I don't expect Bitcoin to be making new all-time highs anytime soon, this is just on the precipice, like just about to break out, which would be full-blown alt season. And the very first target we would have on this would be like Ethereum to probably 5K, something like that. But that would be 25% on Ethereum from 4K to 5K. Although we're looking at more volatility on some of the lower end coins, but really just spreading out, taking some people's gains from Bitcoin and really diversifying into the rest of the ecosystems. And that should just push the rest of them rather than Bitcoin. And I don't even think Ethereum or Solana so much. Those are pretty fully valued. That's what I have for the indexes. Just keep all this stuff in mind. We're going to be watching rates pretty heavily this week. I would have thought that gold might have been a safe haven for some of these trades. Bitcoin is clearly not. So I don't know where the scared money is really going just yet. If I find out, I'll let you guys know. But we do have gold. Had a great week. Pulled it all back, sitting again on this 200-day moving average. And I do expect a little bit of a bounce here. Probably back to right about this. This is one trade to look at this week as well. This would be like one of those manipulation pushes down so that larger institutions can really kind of get positioned. So that's it for the major look. So here's the other chart. So that's first view, this is second view. Right now we have semis that kind of pulled back and are looking to possibly continue. So this is one sector I want to look at. Consumer staples, you know, this is typically a safe haven. This is like Coke, Pepsi, very boring stuff, but sometimes that's where the scared money kind of flees and they want to be in a little bit safer trade. And we'll take a look at biotech this week also.